Right. Thank you so much, everyone, for being here tonight for our financial empowerment webinar. Tonight's program is titled Protecting Your Home, Your Assets, and Your Future. The program is in conjunction with the Community Captains Initiative. We're so happy to have their partnership on this. The Community Captains Initiative is local residents within City Council District 27, which is represented by Council Deputy Speaker Nantasha Williams. And these captains serve as trusted connectors between the council office and the community. The initiative empowers volunteers to share resources, elevate opportunities, and support programs that strengthen economic mobility, civic engagement, and neighborhood well-being. So we're so delighted to be able to share this program as part of that work. So, if you are not familiar with us, or maybe you knew us by our old name, just for a refresher, we are Build Up Justice NYC. We are a civil legal services provider. We changed our name last year from Brooklyn Legal Services Corporation A, or Brooklyn A. Even though we changed the name, the work is still the same. We still have the same mission that we've had for nearly 60 years, delivering high quality legal services to low-income and mid-income New Yorkers across the entire city. We have three core programs: preserving affordable housing, which offers a range of services, including eviction prevention, anti-harassment, work on fair housing claims, repairs and essential services, and tenant organizing. That work is in Brooklyn and Queens. We have our Community and Economic Development Program, which is citywide. It works with small business owners, largely on commercial lease matters, including negotiating new leases, lease renewals, dealing with rental arrears and landlord harassment of commercial tenants, and advice on laws and options. That team also works with nonprofits and community organizations on a variety of different services, including things like 501c3 incorporation and organizational support. And then we have our Consumer and Economic Advocacy Program, which houses several different units, which are, or teams rather, that are all also citywide services. So anyone within the 5 boroughs can access these. And our program tonight comes from this team. So we have within it a low-income taxpayer clinic, which handles disputes with the IRS or New York State. We have our foreclosure prevention team, which handles foreclosure cases, matters like deed theft and predatory lending. We also have our domestic violence unit working with survivors who will be or who have issues needing help with orders of protection, child custody, and other types of support. And then our wills and estates program, which is the source of our info here tonight. And you'll hear from our wills and estates attorney, Andrew Epstein. So those are our core programs. If you have need for services in any of these areas, please do reach out to us. We'll share our contact info at the end here, but you can also visit our website at buj.org. So tonight's program is, as I mentioned, in connection with District 27 and the New York City Council Deputy Speaker, Dr. Nantasha Williams. We're so delighted to partner again with the Deputy Speaker, and we're excited to bring this program to you in conjunction with her office. The Deputy Speaker will be joining us tonight, I believe, a little later in the program. So when she gets a chance to join, we'll pause briefly and give her the floor for some remarks. But we'll go ahead and dive into the program for that. And you'll be hearing from our Wills and Estates attorney, Andrew Epstein. Andrew is an excellent attorney, has fired up our Wills and Estates program just in this past year, and it's already had incredible success. So we're so thrilled to have him on the team. Andrew has worked in public accounting, law, and finance. He has advised clients on compliance, wills and estates, and tax matters affecting individuals and legal entities, including financial institutions, small businesses, and nonprofit organizations. So we're delighted to have Andrew presenting for us tonight. Our agenda, we will be covering wills and estate planning and why it matters, the common scams to keep an eye out for, understanding property taxes, and then going into some resources. Once we're done with the program, we'll do a Q&A session if folks have questions. So I'd ask just hold questions toward the end. You're welcome to put them into the chat, but we won't. We'll get to them all in one on the back end. I do see actually there's one question in the chat. Will the recording be available? Yes, we're recording tonight, and we'll be posting it on our YouTube channel afterwards. So yes, and I just want to note for the questions, there's a couple of options. Once we get to the question and answer portion, you should see a Q&A button on your Zoom screen. That's one place to type in a question. And we can do a written reply, and we'll have Andrew reply verbally as well. If you want to ask your question verbally, there's a little raise hand button you can press. That'll let me know you'd like to have your mic unmuted. You can ask your question directly, and then we'll go from there down the list. So yes, we'll have the deputy speaker join us when she hops on in a little bit, but we'll go ahead and get started. I'll pass it over to Andrew.
Great. Thanks, Will. And thanks for that introduction. It's so great to see so many people here today, all coming to talk about estate planning issues and how that can really protect your legacy and set you and your family up for a better future, really, and for a more predictable future. So the first thing that we're going to cover today is estate planning. We're going to do sort of a big 5,000-foot view over what estate planning is. There's lots of different tools that are potentially involved. There's lots of things to consider. And we're going to kind of run through a few key questions. If we can go over to the next slide, please, Will. So we're going to cover essentially the who, what, where, when, why, and how of what estate planning is tonight. We're going to go over who estate planning is for, or rather what it is, who is it for, what makes it important, when a good time to start is, how it actually works and how it actually serves to protect your assets. Sometimes people ask, well, I do all this, but what does that mean? I've now just got a bunch of piece of papers that are sitting at my desk that I don't touch. And then last, where you can go to get assistance. I always say at the top of these webinars is that having an estate plan of any kind, of any shape, no matter how it looks, is really one of the most important tools that a homeowner or really anybody can have to protect their assets from scams and other bad actors. And that's because scammers take advantage of the fact that people have not planned, they haven't thought about things, and they approach them in ways to pressure them. And so hopefully after listening tonight, you'll have a little bit more knowledge and will be better armed if a scammer makes their way to you. So next slide, the first thing we're going to cover is what is estate planning. So estate planning is the process of preparing how your assets will be managed and distributed after your death, and helping ensure that your wishes are carried out efficiently. That can involve a will, that can involve powers of attorney, healthcare proxies. We're going to go into specific documents later, but essentially estate planning is a holistic process that involves making these documents. It also involves conversations with your families, with being in touch even with your mortgage brokers. If you're still paying off the mortgage on your house, there's a lot of different parties that get involved when you engage in estate planning. Some of it even is going to your bank and making sure you've taken steps at your bank to make sure that your assets are provided for after you pass away. So we're going to get into all of that a little bit more as we go on. So for the next slide, and this is something I'm going to focus on a little bit later in more depth too, but who is estate planning for? And this isn't just a cliche, it really is for everybody, not just the wealthy need estate planning. Truly, everybody can benefit from estate planning, whether you're a homeowner, a parent, a senior, a young person. There's really nobody who, just by virtue of who they are, can't benefit from estate planning. For homeowners, that can mean protecting your home to make sure you can stay in it while you're alive, and to ensure that your descendants keep access to it after they pass away, which is a very important facet of building generational wealth. Parents, even if you don't own a home, you still want to plan for your children to make sure that they're taken care of to the extent possible after you pass away. That can be accomplished by naming a guardian in your will. It can be accomplished by even setting up a modest trust for your child's benefit to make sure that they have access to some sort of assets after you pass away. So there's some way for them to care for themselves. Seniors, it kind of goes without saying, of course, estate planning is important for seniors, but particularly, and what I'm going to focus on later as well, is special documents called advance directives. And you may have heard of powers of attorneys, healthcare proxies, living wills. These are some really important documents for people to take advantage of while they're still alive, while they still have capacity to make their own decisions, that can end up really affecting your family later on down the line and you while you're alive. It can be very important to maintaining your own quality of life. For young adults, it's less obvious. Maybe you don't have a kid yet, you don't own anything yet, but it's really important to get started on building the good habit of knowing what you do have, being aware of how that grows, being aware of what happens to it if you pass away young. Even that can happen, and it is something that's important to plan for. Some common misconceptions that I have heard from clients coming in is, oh, I don't have enough money to do this. I'm too young. Even if I had enough money, I don't have enough cash on hand to do it. But what really is an important takeaway here, and it's something that we put down at the bottom, is that not having a plan ends up often costing much more in the long run. And I see we have Deputy Speaker Williams has joined us. So, Will, I don't know if you want to take it from here for a minute.
Yeah, absolutely. Hi, Deputy Speaker. Thank you so much for joining us.
Thank you.
We'll love to, give you the floor for some remarks.
Awesome. Well, thank you so much to Build Up Justice for all that you do for our constituents. For those on the call, we work really closely with Build Up Justice to address a wide range of issues, and they've been so good about helping our most vulnerable constituents with sticky issues. There's typically not a lot of support for homeowner related concerns, and Build Up Justice has been really helpful there, amongst many other things. So I just want to thank them for this presentation. This is such an important topic. And I always say this, make sure that if you're on this call, that you don't hoard this information, that you share with your friends, your neighbors, your family, because that is how we ensure that all of the folks in our community truly have the resources that they need. And so thank you so much for joining, for those who are on the call. And thank you again to Build Up Justice for all the work that you do and for this presentation. And my office will continue to provide this information to the community. And if you all have any interest in other types of workshops or sessions, please feel free to reach out to us. I believe Joanne from my office, she just joined, is on the call, or Build Up Justice works so closely with us. So if we're not on the call, I'm sure if you reach out to Build Up Justice, they will definitely pass the message back to us. So thank you so much. And I hope everyone has a great evening.
Thank you so much. Yes, I want to absolutely agree. We really value our partnership with you. And yeah, helping homeowners, helping New Yorkers in any way that we can. And you've done incredible work, and we're so glad to be close partners with you and your office. Yeah, thank you. Hi, Joan. Good to see you too. If maybe we can, Joan, if I don't know if you wanted to share anything about upcoming events or anything like that, you can jump in. Otherwise.
Just to jump in and say thank you again to Build Up Justice for providing such an important resource and information to our community. I'm sure the Deputy Speaker mentioned how our district is mainly homeowners. So, we want to make sure that we are answering the call when it comes specifically to home ownership and some of the issues that we've heard firsthand in the district office. So glad to always be in partnership. Look forward to many, many more, and going to enjoy the webinar. I'm sure there's information that I need to know as a homeowner as well. So thank you again, Will, Build Up Justice, Kendra, and to everyone who joined, thank you, and your interest in really great, valuable information.
Thanks so much, Joan. And yes, and to the Deputy Speaker's point, definitely please do spread this around. Like I said, we're recording, so we'll have this on our YouTube. We'll be sure to follow up with folks with the link, so you can continue to pass it around to folks. And with that, I'll hand it back over to you, Andrew.
Yeah, thanks everybody. I mean, we have a great partnership with the Deputy Speaker's office, and we get so many people coming in from Eastern Queens and in Southern Brooklyn also coming into our office with these kinds of issues. And I think a lot of the issue stems from, there's this conception that all homeowners are swimming in cash. And just because they may have equity in their home, it means that they're liquid and they have tons of money. And we all know that that's not the reality. And so having these kind of services available for people is really, really valuable. And so we're really honored to be able to offer that to people and the communities across the city. So moving on, the next thing I wanted to get to after talking about really who it's for, which is everybody, and everybody on this call needs it and can benefit in some way from some kind of estate planning. But I want to get a little bit into more on how it actually protects you. First and foremost, and something I really want to highlight, is that it makes deed theft and scams much harder to pull off. We're going to go more in depth into deed theft and other scams later on in the presentation. But one of the ways that scammers take advantage of people is that they don't have a plan. No one knows what's supposed to happen to the house after their loved one passes away. Nobody knows who really even owns the house. People can walk around the neighborhood and say, "Hey, have you done a trust is really a great idea for your house." And they'll have you sign a trust right then and there. There's lots of things that go on that can really only be accomplished if a homeowner hasn't taken steps already to protect themselves. So that's one way that it can protect you. Just simply existing makes you more aware of what the potential scams are. Something a little more obvious is that it protects you by making sure your assets go to who you want them to go to. If you think of a last will and testament, it's pretty much exactly what you think of when you see it on TV or in a movie. It's a document that says, this is who I am, these are my relatives, here's who gets what, and in what percentages and what amounts. And by having that plan, it makes sure that that actually happens. I do want to call out something that happens in some other states. In New York, in order to have a will be effective, it has to be written and there has to be certain formalities that are followed. It needs to have two witnesses involved. Sometimes a part of the will needs to be notarized, and there's a few other conditions that go in there too. But other states do allow you to make a will just by writing it by hand and saying, this is my will. And so I don't want anybody on this call to think, well, I heard that you can do it in maybe Michigan or somewhere else, so I can do it in New York. If you're a New York resident, you have to make a will according to very strict formalities. So don't just write down what you want your wishes to be and assume they're going to be honored. I will tell a tale of someone who did do it the other way and how things can get screwy. So we all know Aretha Franklin. When she passed away, she had a very, very fancy estate plan that she went to very fancy lawyers for. She was a resident of Michigan when she passed away. As the family was cleaning out her house and kind of getting everything in order according to what everyone thought her estate plan was, they found, quite literally stuffed in between her couch cushions, they found a handwritten will that they were able to prove Aretha wrote. They were able to prove she wrote it after she made her estate plan. And in Michigan, that controlled. So in certain situations, you can find, even if you do all this planning, it can kind of be for naught if someone does something later. So at least New York does have that protection. Some see it as a protection, some see it as a restriction, but at least you are protected that if you go through an estate planning process, particularly with an attorney, and you do everything right, what you put in that document is going to be what happens. Going along with making sure assets go to your beneficiaries, it also makes sure that the person you want to represent you after you pass away actually is the person who represents you. Some people just assume it's going to be their spouse or their oldest child or someone that they've known their whole life. But it's very important in your will or in any estate planning document you make, you can put in exactly who you want it to be. You can put in succession requirements to say if someone can't do it, then it goes somebody else, then somebody else. You can make it very specific on how you want things to go. Having a plan ahead of time also can reduce legal costs and delays for your descendants and your beneficiaries. It's much easier for someone to transfer property out of your estate if there's a will or a trust than there would have been if there was nothing, and they have to kind of do everything from scratch. And then last and certainly not least, having an estate plan, because of all these things, will help you, or can help you, I should say, build generational wealth. It will ensure that you and your family keeps access to that home that you spent all this time paying off the mortgage for. It can help make sure that, one way that families can lose wealth sometimes is if an adult child is out of work, they need somewhere to live, and they'll be able to always come back to the family house potentially, rather than spending more of the family money on renting somewhere or buying another property. This is a way that we can help conserve wealth so more gets passed down to the next generation. And so for the next slide, we're just going to go over at this point now some of the actual documents that we prepare for people and what they do and how they can help. So first, I want to talk about wills, which are last will and testament is the official term for it, but it just goes by a will. And a will does, like I said, pretty much what you expect in common culture to think a will does. It names an executor to carry out your wishes. So that's someone who steps into your shoes after you pass away and essentially acts as you in order to get your property to your beneficiaries. What does that mean in practice? So let's say I make a will and I make Will my executor. After I pass away, my will says to make sure, let's say that everything let's say I want half to go to my nephew and half to go to my brother, for in whatever way. It's Will's job then as executor to make sure that actually happens. If you don't name someone to do that, property can sit and sit and sit and nothing happens to it. And that's sometimes why we can see, you may hear in the news, oh, a house on the block is tied up in an estate or something like that. That's what's happening. There's something going on with the estate where either someone hasn't been, there's either no representative or the representative is not qualified or something else along that line, and the estate administration process is getting held up. Often that happens because there is no will. The will also describes how the assets are distributed. So like I said, I just said 50-50. It could be, if I have a house, I could say, I want my house to go to my brother, but I want my, I don't know, my retirement account and anything left in my bank account to go to my nephew. It can be any variety of different ways. It can be, let's say I want to make a trust for my nephew because he's too young to take money right now. I wouldn't want him to get whatever is left in my bank account. I want him to wait until he's 25 or 30. So what I can do is set up a trust that just manages that money, make sure it's available to him if he needs it, but he gets it outright when he's a little older and more able to handle those assets. If you have minor children yourself, it can help appoint a guardian for that minor child. When someone passes away, especially if both parents pass away, custody does not automatically necessarily transfer to the next closest relative or anything like that. It's very important for the parents to name guardians in their wills. It's important to mention that a will alone is not enough to create a guardian over a minor child. There does ultimately need to be an order from the family court. But when a will has something very specific about who the parents want the guardians to be, the family court takes it very strongly into consideration, and they usually just follow what the will says. And then last but not least, in fact, it's very important, it often helps avoid confusion in family disputes. Once money gets involved, and especially once property gets involved, and especially property in New York City, that is very valuable, even if we don't necessarily think of it that way. A lot of cash starts potentially coming up, and family members who used to not have any problems with one another suddenly have very strong opinions about each other because everybody wants to make sure that they get their piece of the pie, within reason. When you have a will that spells out exactly what happens, there's much less chances or possibilities even for families to fight. Some wills even include clauses, it's called in Latin an in terrorem clause, but it basically means if you even try to contest this will and you fail, you get nothing. So it's often a tool that's used to really just make sure that whatever the testator wishes, and the testator is the person who created the will, whatever the testator wishes actually happens. And I talked about this at the note at the bottom here about following legal requirements. The will has to be done in a very specific way. No handwritten wills in New York. Please remember, do not just think you can write out your will here. It is not something you can do. You can use a service like LegalZoom, even though I don't always recommend it. But you definitely want to have some sort of written, typed up, appropriately witnessed, appropriately executed document. Depending on what your assets are when you pass away, you then may have to go through surrogate's court, which is what most people know as probate. In New York, we call it surrogate's court. That's situationally dependent. Not all homeowners' estates necessarily have to go through probate court. There's other ways to transfer property without the court's consent in certain situations. But that is a major hurdle sometimes, is getting through surrogate's court. And having a will really does simplify things. Without a will, it takes a lot longer to even get in front of the judge. So those are some just basic highlights about wills. Next, I want to get into more about the advanced directives that I was talking about. And this is really more who speaks for you while you're alive, is what we could also maybe add to the title of this. Who speaks for you while you're alive? When you can't speak for yourself, so let's say you get into an accident and maybe you are intubated, or you develop a mental disability, or you're for whatever reason incapacitated and can't speak for yourself, we need someone who we trust to make decisions for us, whether that's financial decisions or medical decisions. A financial decision, that's usually your power of attorney, which I'll get into in a minute. Medical decisions is a healthcare proxy. But when you don't have these documents, it can create a lot of confusion. Doctors will be wondering who they go to make a final decision. If you have a large family, you all will probably have different opinions on what needs to be done. Having documents ahead of time make things very clear about who the final decision maker is and they can even include instructions on the decision that that person is supposed to make specifically. We were going to show you a clip from a PBS documentary called Facing Death, is what it's called, which is much more dramatic than it sounds. But, you know, this is definitely not a light subject sometimes to be thinking about. But it's a really good documentary from a couple of years ago that Frontline produced about sort of the end of life decision making process and what families face. And they bring cameras into the hospital in rooms with people who don't necessarily have documents saying what they wanted to happen and whose families are now grappling with what to do. And you can see in that in this clip in particular, which I really recommend people look up on YouTube later, the whole documentary is available on YouTube. It's a family where one of the children was a nurse, another child was a doctor. Those were the two children, and there was an adult grandchild as well. The three of them, even with medical professionals involved, couldn't agree on a decision they had to make. And so they had to vote over whether to keep their mother alive, which can really create a lot of anguish, as you can imagine. Even watching it can be, it's a really painful watch to see what goes on. And the hope is that with examples like that, folks can see really the advantage and really the greatest gift you can give sometimes to loved ones is having these decisions made ahead of time for them so they don't have to wonder among themselves, are we going to, do we keep the feeding tube in? Do we not take the feeding tube in? What happens if someone stops breathing? They have to make really detailed decisions. And so making these documents ahead of time and making sure your doctors have access to it is hugely important and can really save a lot of literal grief for family members. And so moving on through that, we'll get into what those documents are that can really be very helpful. The first, and this is less to do with medical decisions, is a power of attorney. A power of attorney is a document where you designate an agent, who it really should be someone that you very, very, very firmly trust, who can manage your finances in the event you're not able to. Powers of attorney are usually immediately effective. So that means if I made a power of attorney today and made Will my agent, then that would immediately give him the authority to go into my bank account and take all my cash. But of course, that's not going to be what happens. And I see I'm having a camera issue here. If you just bear with me one moment. I'm not sure what's going on, but I will try to fix that in a second. I apologize. Let's see if this works here. Am I back? Can you all hear me at least?
We can hear you.
Okay.
It's dark right now.
Interesting.
Camera's up. Are you using a plugged-in camera?
And no, it's a wireless camera. That's the problem. Yeah, my camera disappeared from my option of my list of options, unfortunately. So sorry about that, everybody. Let's see if I can get it to pick up. If not, I'll just go through audio. Mm-hmm. Yeah, I apologize. It doesn't look like it's working for some reason. But I'll just power through. We'll just go through. Sorry, everybody, about technical difficulties there. But so power of attorney, like I was saying, that names an agent for your finances. So if I made Will my power of attorney today, he could go to the bank the minute after he signs it, and he has access to my bank account. Usually that's how it works. You can make powers of attorney that are called springing powers that only come into effect under certain circumstances, but those are generally not advised because then there can be a dispute over whether that pre-existing condition has been met. So sometimes a power of attorney may say, if I am incapacitated according to the opinion of 3 doctors, including my primary care physician, then you have power of attorney. Well, what if someone needs to act and they don't have time to get to 3 doctors and figure everything out? The idea of these is to make sure people are able to make decisions easily, quickly, and with broad powers. The next, and this is more relevant to what I was talking about before in a hospital situation, are healthcare proxies and living wills. So a healthcare proxy is very similar to a power of attorney. It names an agent to act on your behalf, but the healthcare proxy only gives that agent authority for medical decisions. So that is in a situation only where you can't make decisions yourself, and that is determined by whoever the doctor is that's attending you at the time. You can only name one agent at a time. So it's meant to make sure that you can't have two people disagreeing over what a decision is, which is something that we would have seen in this video that we were going to show, but it's something that you can imagine happens among family members often in end-of-life situations. And then along with the healthcare proxy, sometimes it's a separate document, sometimes it's built into it, is something called a living will. A living will, I want to be very clear, has nothing to do with your last will and testament. It's a completely different type of document, and it's really a pretty poor name for what it is. But the living will provides instructions to your decision maker over how they should make their decisions and even what the decision should be. So when you have a healthcare proxy naming an agent and the living will to give that agent instructions together, you've kind of made the decision ahead of time of what you'd like to do. That decision may be, if you're in a certain condition, to simply withdraw treatment or to not withdraw treatment. It can be to withdraw certain kinds of treatment. It can be to allow for pain relief or not allow for pain relief. It really lets you make all those decisions ahead of time so that your family members don't have to anguish with worrying about what decision they should make, because there's often never a good decision in a lot of these situations. There's really a lot of times where whatever decision you make is going to be something that's painful. And so being able to make that for your family is really, really crucial. And it's important to note that these documents only control while you're alive. The minute you pass away, none of them matter anymore. So you may have named someone you trust as your power of attorney, but once you pass away, if you didn't have a will, that person isn't automatically your executor. The person you're naming your healthcare proxy doesn't automatically have authority to handle your remains after you pass away. There's lots of other kinds of documents that we're not covering here that could come into effect, but that's another reason why it's so important to deal with an attorney. Next, I want to go into some other steps you can take now, even before going to an attorney, that are really important when making an estate plan. So first, things that don't happen in your will are bank accounts, retirement accounts, and some other kinds of financial assets. Really, anywhere you have an account that you can log on to online, they'll have something called beneficiary designations. It's always important to make your beneficiary designations according to the rules that your bank creates, because once you make those designations, they're set in stone. You can change them freely as much as you'd like, but those will control. If I say in my will that I want my bank account to go to Will, let's say, but on my bank's website, I made it my nephew, it's going to go to my nephew. Will's not going to get anything, because what controlled is what the documents the bank has. Next, important documents, including beneficiary designations, including wills, powers of attorneys, trusts, anything you may have created, it's important to keep those organized and in a safe place where you know where they are and where family members know where they are. The last thing you want is, after you pass away, let's say your kids know you made a will, but they can't find it. If they can't find it, then they're kind of stuck and they end up having to go as if you didn't have a will, and your wishes will not be honored. It's important to keep these in safe places because there's no central clearinghouse where wills and powers of attorney or anything like that is kept. There is a program in the court where you can store your will there, but I generally don't advise it. Think about all the kinds of data breaches that have happened, and I personally would not trust Kings County or Queens County Surrogates Court with my vital information, because they probably do not have appropriate safeguards in play. And even if they tried to, I don't think they would be able to. So I think it's really best to keep it for yourselves. Digital assets, this is coming into play a lot more. It's kind of a hot thing in estate planning, but think about, people now have Bitcoin with considerable value, or other cryptocurrency, other sorts of digital assets, even things that are within video games now we've seen be given monetary value using the fake currency that's within a video game. So it's really important to have all of these kind of accounts just in order. And then last but not least, of course, again, is funeral and end of life wishes. You can do a pre-planned funeral. You can create something called appointment of agent for the disposition of remains, which will appoint someone who will follow the directions for your pre-planned funeral and make sure everything goes the way it's supposed to. But a lot of these are pretty small steps that you can take now that really can save a lot of problems down the road. Even, consider just having your password to your email account shared with a family member, or setting up in a recovery account, because think about all the things you'll need to access later on that you won't be able to do without that recovery. So the next couple slides, we're going to go into just a couple examples of different real clients who came in. We've changed their names, but just some real stories that I've seen over the past year or so since I've been with Build Up Justice. So first, Jane, not her name, but a client who came in. Her elderly father was ill. He lived in a co-op in Queens. After he passed away, after she'd been living there with him for a couple of years, taking care of him, her co-op board has tried to evict her many times over the past 10 years because she has not been able to get on the stock certificate of the apartment because he didn't have a will, and there are difficulties in establishing that she's really the sole heir who deserves the apartment. In order to do that, she's had to go to court several times. Each time has been a failure because there's a lack of documentation to establish that she's the proper heir in this situation. Fortunately, she has not been evicted yet, but you can imagine the headaches that come along with having over 10 years of litigation just to make sure you can stay in the home that you own. Having a will could have really simplified this. And if the father had been able to just say, this is Jane's apartment, it doesn't go to the rest of my kids, that would have made this a lot simpler. And next, we have another client who we're calling Shirley. She passed away, or really, it's Shirley's daughter is our client, but Shirley passed away without a will. She had taken out a reverse mortgage on her home before she passed away. Reverse mortgages are often very tricky vehicles. They have certainly some good uses, but often they're predatory. One of the things that happens with a reverse mortgage is after the person who takes out the mortgage passes away, the mortgage company pretty much immediately attempts to foreclose on the home, which then forces the heirs, if they want to remain there, to take out a new mortgage to pay off the loan of the reverse mortgage. And this is after their parents have already spent their entire lives paying off that house. So it keeps you in this cycle of paying for a house that you already own. What happens when someone doesn't have a will and when someone doesn't have a representative named in that will is that there's no owner of record. There's nobody for the mortgage company to look to say, we need to renegotiate this. There's nobody for the Department of Finance to look to wonder about where taxes are coming from. This also went on for a very long time with this family. They ultimately weren't able to stay in the house because of how the estate shook out. But if there had been a plan in place, if the children had been aware that there was a reverse mortgage on the house, if everyone had been aware of the need to take out a new mortgage to pay off the reverse mortgage, they probably would still be in that house today with their families. So that's just something else to keep in mind. And something very important is to keep your entire family engaged and knowledgeable about what your estate plan says, or whether you have one at all. It's also important for your kids to know that you don't have anything if you decide not to, although I hope today, after this, you will decide to make a plan. But that's another really important thing. And then the last thing I want to get into today is something really interesting that we've started looking into at Build Up Justice. And this is kind of getting into the disparities about who is served most by estate planning and who gets to experience the benefits of estate planning and who doesn't. These graphs are from the Urban Institute, which did a study in 2020 about the disparities between different racial groups and their uptake and their use of estate planning. Particularly, this is about wills. I don't think this will come as much to a shock of many people here, but as you see, based on your race, there will be more or less likelihood that a family has created a will. And then based on how much cash you have on hand, which is what the second one is, can help determine even more likely whether someone has a will. So race is a barrier to making an estate plan, and cash on hand is a barrier to making an estate plan. We can see that on average, 42% of homeowners over 50 don't have a will. But then if you look at Black and Hispanic families, that jumps to 69 and 76%, while white families are at 34%. So there's a real big difference there. And that comes into play, Will, if you go into the next slide, into actually how much money ends up getting passed down to heirs. So this is kind of a confusing table here, but I'll try to describe it as best as I can. What this is trying to show is it shows first what sort of the prototypical white person in 1980, what their estate would have been, what the next generation would inherit based on the rate of people that had wills. And it goes down to each generation to show how much they would have inherited and then what that wealth would have grown to by the time that person reached retirement age. Next to it is they only cover Black people in this, but they've done other studies with Hispanics and with other races as well. And it shows what happens with the rate that they saw with Black families at the time that the study was made, and then what would have happened if they were doing wills at the same rate as white families. And you can see when you get to the ultimate end in generation 3, there's about a $50,000 difference in what someone ends up with owning at the end of their life, just by virtue of having had planned at higher rates. So, and that's not to say even what that plan says, the amount of wealth that someone may have accumulated just by work. This is just kind of the base homeowner of what they think, the most basic general person would come out with at the end. And we see huge differences over the course. I think this study went from 1980 to 2020, so that would be 40 years of data. So they really looked at this for a long time, just to see sort of what the differences would be. And it really highlights how important having a will is in building generational wealth. So next and last, the last thing we'll touch on for estate planning before I get to some questions at the end, I saw some came in, but we'll get to those, is when should you start estate planning? And the answer is as soon as possible, of course. You want to update your plan. It happened, this is not something that you do once and then never think about it again. If you make a will and then you buy a home, you're going to want to think about it. If you make a will and then you have kids, you're going to want to think about changing it. If you get married, if a loved one passes away, lots of different life changes can trigger the desire to come back and do a new will. So always think about doing an estate plan, and we are available to help. We're one of many orgs that we'll get into later that are able to help. So moving on from that, a little bit of a transition into some common scams. And what I'm going to cover today, for the most part, is deed theft, because it's a big deal that we're seeing in New York City, especially in Black and brown neighborhoods in Southeast Queens and South Brooklyn. It's unfortunate that there's no easy way to say sort of what deed theft is, since deed theft takes a lot of different forms and can be done in a lot of different ways. But the ultimate takeaway is that it's a process by which a scammer or someone who is just an unsavory individual, if we don't want to label them as scammer, someone is able to take the title to your home, put it into their name, and then they walk away scot-free owning the home, and you no longer own the home anymore. You basically become a renter in your own home. So how does this happen? The first kind of way is a simple title transfer. So this would just be someone saying, hey, I can tell your house is in foreclosure, transfer it to me. I'll let you keep living there, and I'll pay off the mortgage. That's one way. That's, it's usually through more coercive methods than that, but that's the simplest way deed theft can happen. Another way is called title transfer with equity stripping. It's a much more technical way to do this, but essentially what happens is over time, scammers take away bits and pieces of the equity of your home until at the very end, you're left with nothing and you're again just a renter. And the last way that we see the most, I think, get Build Up Justice, and this is probably because we have a sizable foreclosure unit, is we see a lot of scammers coming in claiming that they can rescue you from your foreclosure. And they have an easy fix. All you have to do is sign this document, refinance this loan, do this, do that, and then you'll be safe. Not surprisingly, that doesn't work. There's often no magic bullet for these things. And what people are doing is actually have you sign the title over to them. They then pay off the loan in another way. They sell the house for a higher amount of money. And then you're again left either a renter in your home or at worst evicted from your own home. Next, I want to go into some warning signs for this. First, like I said before, there's no magic fixes. If someone says, oh yeah, just do this one thing, pay me this one amount, sign this one piece of paper and you'll all be good. That's not almost never the truth. There's very few magic fixes for any kind of legal problem. Getting strange mail from people you don't expect to get mail from is often a problem. Anytime you have an attorney or anyone, frankly, unsolicited come to you for help with a foreclosure or any other mortgage issue happening, that's almost always going to be a scammer. And that's because a lot of this information is public, and investors is what they'll call themselves. Investors are watching for when things come up on foreclosure, and they try to scoop up as many properties as they can to create new developments in neighborhoods that don't necessarily want them. And then last are false associations with established lenders. So I think some of the pictures from the slide before go with this, but people will say that they're from Remax or whoever it is, any kind of real estate company. They'll say they're from an established company. It's very similar to phishing if you're familiar with that through email. They're just lying to you. They're not affiliated with them at all. They'll just have a logo in their email, or their paper will have their letterhead will have some kind of logo in it to make you think that they're from a major lender, but they're not. And there's no easy way for you to determine that other than just looking out for these other warning signs. But it's unfortunate that it's such a disparate thing in New York, deed theft, because it would be great if we could say, here's one way to stop deed theft. But unfortunately, deed theft can sometimes happen because of a lack of knowledge that something has been filed on ACRIS, which is the property record system in New York City. It can be because a scammer has come and just approached an elderly person living in a home. It can be a real variety of things. And so you really just have to be hyper vigilant when it comes to your property, especially right now, even though there is finally some progress on getting some of these scammers prosecuted. There was one last year a major one in Brooklyn and Queens, who finally was put in jail over this. So hopefully as time goes on, we'll see the DA's office pick up on that. So that's it for this portion of deed theft. And next and last, I want to talk about, this is a major topic change here, but I want to talk about property taxes. It is a very important issue. It's something that's in the news a lot recently. We've seen proposals to raise property tax rates. We've seen proposals to lower property tax rates, change how it's all done. And so the purpose of this is just to give a big overview of how the property tax system works, where the money goes, how it's spent, and how it's collected. So first, I want to go over where that money goes. This graph that's about to come up on the screen, there's 4 main categories where property tax dollars go: health and welfare, city services, education, and then public safety and other city workers. 44% of the city's tax revenue comes from property taxes, meaning property owners pay a huge portion of the city's budget, nearly half. So it's really important to receive property taxes for the city, which is why they are very aggressive in collections. The way the bills work is you only get a bill if you pay them yourself. If you have a mortgage, the bank usually receives the bill, and the bills are sent out a month before taxes are due. So if you still have a mortgage, this isn't something you're often really thinking about front of mind, but it is still very important. Next slide, please. This goes over the different kinds of properties in the city. There are different property classes and the rates of those taxes. I'm not going to read off what's here. But essentially, depending on the class of property that you own, you have a different tax rate. There's also a lot of other Byzantine rules that determine sort of what your ultimate liability is going to be. That was highlighted a lot politically about changes that can possibly be made to the property tax regime. You can get alerts when a payment is credited to your property. You have to be listed as an owner on official property records. This is where what comes into what I was talking about before with that client who their mother passed away with a reverse mortgage. They couldn't pay the taxes on the property because they weren't the owner of record on the property, and they couldn't update their records because they couldn't settle the estate appropriately. Once that's all handled, you can change it though, and you do that on the Department of Finance's website. And it's not that painful for process, but I think we do have people who can help if you need that. Next, I want to talk about some exemptions to property tax because it can be so expensive and such a burden. There are a lot of exemptions out there. First is the STAR exemption, which is school tax relief. There's 2 main types. There's basic STAR, which it has to be your primary residence, but for anybody up to certain income limits, they can get an amount of their property taxes reduced. There's enhanced STAR, which has a lower income threshold and is only available to seniors, but it creates an even larger exemption. Both have ownership rules that are common to them. The property must be owned by the applicant or the taxpayer. You can only have 1 STAR benefit for each married couple, and only individuals are eligible. Corporations, partnerships, and LLCs are not. Next, there's other exemptions available just for senior citizens, along with Enhanced Star. There's additional property tax exemptions that are also based on income and age. You have to have owned the property for at least 12 months, unless you had the exemption at a prior home. You can kind of carry that over if that applies to you. The local limit does range pretty wildly, as you can see, from $3,000 to $50,000 a year. I've seen slightly higher, I've seen slightly lower income limits, but it really, depending on where you fall there, will determine how much you get written off your tax bill. You must be older than 65 or older. And the owners have to be either legally married or siblings with one at least being over 65. Next, there's even more exemptions for veterans. So veterans, spouses or surviving spouses of veterans and Gold Star parents qualify for these exemptions. There's the alternative veterans exemption, the Cold War veterans exemption, the eligible funds exemption, and many, many, many others. These exemptions, like others, are not automatic. You have to apply for them through the Department of Finance. The deadline for this year's taxes has unfortunately already passed. It passed on March 1st. But for 2026, 2027 taxes, you can apply for that now already to get exemptions for that tax year. There's also exemptions for disabled people. Depending on your disability, there's different kinds of exemptions, but essentially the long and short of it is that it has to significantly limit your daily activities. So that means you're unable to care for yourself, you have difficulty walking, seeing, hearing, or speaking. You have difficulty learning, you're unable to go to school, you're unable to go to work, not related to drug and alcohol abuse, other kinds of disabilities. Along with the disability, you also have to have an income below a certain amount. I think for this past year, that's the number we have here, $58,399. There's different sources of income that count and different that don't. That's all in the instructions, but it's something that you can go over with an attorney or a tax preparer. All of the owners of the property must have a disability for this to work, or the property has to be owned by spouses or siblings of somebody with a disability. You can also qualify if the house is in a special needs trust or if someone just has a life estate on the property, which I can go into that if anybody has questions about what a life estate is or what a special needs trust is. But those are special ways you can hold a house. Some of the consequences of non-payment, I'm very happy to say that lien sales are not happening this year. The mayor did announce that a few weeks ago. And that's really great news for our clients, is that it used to be in the city and maybe in the future that when you are delinquent on your property taxes after a certain amount of time, your property gets placed in a lien sale, which basically means somebody buys the right to collect the outstanding debt, which can then lead to your house being foreclosed. It doesn't happen in most of the country, in most of the world. They don't have things like this. It's not unique to New York, but it is, I think, for cities of its size, it is somewhat unique to New York. And so it had been on long pause during the pandemic. It came back, I think, last year once or twice. And then this year, we now know there won't be one in 2026, and we're hopeful there won't be one next year either. It doesn't actually sell the property itself if your house gets listed on the lien sale, but it puts it at much higher risk of foreclosure than it was before. So we're really pleased that it's not happening this year. And I think most advocates and most New Yorkers are happy that it's not happening this year. So I won't go any more into lien sales on that because we're thankfully pretty happy. Next, I just want to go into some other resources that you can reach out to and other places you can find assistance. And I think I saw some questions come up on this a few minutes ago, so I think I might answer some now. So for deed fraud, you can create alerts to see if anything's recorded against your property, and you can sign up on the Department of Finance's deed fraud alert page. There's two real different things here. The first is the Department of Finance, and the next is ACRIS, which is what I mentioned before. ACRIS is the system that the city uses. Every single deed that's recorded in Manhattan, Bronx, Brooklyn, and Queens goes on ACRIS. Staten Island, of course, uses a different system, but it's the same idea. Anytime any document gets recorded for your property, it gets posted there, usually within a week or two of being submitted. That includes deeds, mortgage agreements, if you have a condo, UCC notifications, if you have a co-op, it's UCCs. everything gets uploaded there. If you're a property owner, you can sign up on Acris's website to receive alerts if anything ever gets uploaded. This can be a really important way to stop deed theft, because often what happens is someone can just file a deed. There's no protection in New York as it stands, and no way to stop anybody at any time from drafting a deed for any property, saying they're the owner, and submitting it to the system, and they upload it. There's no way, they don't check it. So if you're watching to make sure that nothing's getting uploaded about your house, you can stop it. Because often what will happen is an investor or a scammer will just create a deed. They claim they're you, and they file the deed. Then they go sell the house, saying that they own it, and they can say, "Look, I have a deed online. I'm able to sell it. It's my house," when they never actually had it. And then you can imagine the mess that comes into play there after the scammer has run away with the money. So that's really, really important to sign up for these deed fraud alerts. Next, this is more about lien sales again, but as we go forward, again, 2026, this won't be an issue, but keep an eye out toward the end of this year, early next year, as this may come back up again. Keep an eye on your mail to see if any lien sale notices come in. They get sent out 90, 60, 30, and 10 days before the sale, whenever that may be. I think in the past, it's usually been in the summertime, but don't quote me on that, Will. I don't know if you know any more about that, but I know last year, I think it was in the summertime. So it's usually sort of toward the beginning of the year, you'll get notifications of this. When the sale is yeah, go ahead.
Yeah, I think so. And when we've learned about lien sales, we do our best to reach out to folks and let them know it's coming, and let you know how you can find out if your property is listed. I'm sure the deputy speaker and other elected officials will do the same. So we'll do our best to spread. Oh, hey,
I'm back now. Okay, look at that. Okay,
wonderful. So yeah, we'll make sure to spread the word, so it's not a secret for sure.
Yeah, it definitely won't be the kind of thing that just happens out of nowhere. I think it's at the point now where people are very, very aware of the problems associated with deeds, lien sales, and it's going to be in the news if it happens again, if and possibly when it happens again. So keep that in mind. I'm not going to go further into that because we don't have to worry about it, at least for now. Next is a list of other legal aid organizations. So there's us, there's Build Up Justice NYC. We have our own Wills and Estates group that I am a part of. And if you email us at info@buj.org or call our hotline at 718-487-2300, you can always find someone and they will get you in touch with an attorney to do an intake. And that's really all from the Wills and Estates perspective. If you're coming for assistance, that's all you need to do. Once you get the process started with us, we pretty much hold your hand through the whole thing. During our intake, we kind of go over what you may need and what you're looking to do. And then we ask, standard intake questions, figuring out your income and your property situation. And then we determine in what way we can best help out. Next is the City Bar Justice Center has a planning and estates law project. They do very similar work to what we do. And City Bar Justice is itself a larger organization that has connections with, I think, pretty much every legal aid organization in the city. So if they can't help you themselves, they can usually get you in touch with someone who can. There's NYLAG, the New York Legal Assistance Group. It's also a great resource. And last, and obviously not least, considering why we're all here tonight, going to your local elected officials is a really great way to find legal services. We just recently did a program with a state senator out in Queens, and we were in his office, and we had clients come in that we could help out in the office in an afternoon that we had set up. And we're trying to do more of those as time goes on. And elected officials also just, they know us, they know the other legal services orgs, and they can help kind of get you in, if not in front of the line, at least into the line in a good spot so that you can get assistance from someone that you need assistance from when something's going on. And then there's some other city and state programs that I just want to highlight to close all this out. First is Centered for New York City Neighborhoods. They're one of the main funders of our Wills and Estates program, actually. They help out with really anything that you can imagine a homeowner's issue might be. And I think they just recently launched a homeowner help desk initiative back in the fall or the winter as well, but they offer help with mortgage assistance, foreclosures, preventing scams. They can help you find funding for repairs. That's Home Fix and the Restore program that you see over a little further. There's the HRA, which can also help with other issues going on. There's the one-shot deal that can help provide financial assistance to people who have an emergency hardship that they come across. Cash assistance can be for up to 60 months. You can get assistance for them. So it really can be a great resource. And then last year we have the HEAP program, Home Energy Assistance, and it can help homeowners with heating and cooling costs, which especially as we're seeing energy costs rise. And I actually was talking with a client just yesterday who is in the process of trying to save her home, but now that her energy costs are rising, she's not even sure she'll be able to do that. So we're helping her try to figure out ways to get assistance so she doesn't lose her home because her heating bill is unexpectedly high for the month of March when you don't expect it to be. So there's really, the takeaway here is that there's lots of services out there. We covered a lot tonight. It's all very bewildering sometimes when you think about it, but there's lots of different places to go. And the key is persistence and making sure that you say that, you know, you're on top of things and there's people out here to help you when you have an issue come up. And with that, I will turn it back over to Will, and then we'll get to our questions.
Thank you, Andrew. That's fantastic. Like you said, a ton of great information, covered a lot of ground. Yes, I'm so happy to see we have a ton of questions both in the chat and in the little Q&A box. I do want to quickly just shout out two things. First, yes, we are recording this, so we will be posting it on YouTube after. Everybody who signed up tonight, we have your email, so we'll send it to the email you signed up with as a follow-up. And I also wanted to just shout out Joan from the Deputy Speaker's Office. Just mentioned we were talking about ACRIS alerts and getting people notice about a potential attempted deed fraud.
Right.
We collaborated with the Deputy Speaker last year, our team, on a bill to prevent title clouding. Exactly that, giving basically making sure that the city gives folks notice if something is filed against their property to give folks more heads up so that they can resolve an issue. So, a lot of credit to the Deputy Speaker. Our organization, a lot of our peers were working on this. I think that was actually one question: how can we deal with thief theft? We can maybe talk a little bit about that's so thorny to deal with. But yeah, so bear with me, folks. We do have a lot of questions. We'll make sure to get everybody, but I've got quite a few here.
I can run through the chat first if you want, or whatever's easiest for you. Yeah, so I'll just kind of go first. I see from their name is just here as C. Phillips, but it looks like it got answered in the chat, but I'll go over it to the difference between a healthcare proxy and a living will. So a healthcare proxy is a document that names an agent to make decisions on your behalf. What if all you do is a healthcare proxy, what you've done is name someone to make a decision for you. If I name Will my healthcare proxy, I'm in the hospital and I can't make a decision, it's now on Will to decide what happens if any kind of decision has to be made, whether it's go through the surgery, not have a surgery, keep a tube in, not keep a tube in, whatever it may be. He gets that full authority. If there's a living will along with it, that means I've also written instructions for Will to follow when making decisions. So maybe my living will says, under no circumstances should I ever be intubated. If I need to be intubated, I'd rather die. It would say it in a much kinder way, but that would essentially be what it says. Then Will would not have the option as my agent to allow me to be intubated. The decision's made for him, and I would pass away with pain management and everything else that would be required that I would put into my living will. So that's the difference between the two of them, but they do often go together. Why is it so easy for deed theft to occur in New York, and what can be done? That is a very big question. Like Will was saying, it's really easy everywhere. It's not just New York where it's easy. This does happen all over the country. I think part of what makes it maybe particularly easy here is the way that we record deeds. I don't know enough about how other places do it, but it is surprisingly easy to just record anything you want that says whatever you want it to be. And there's no regulatory body that looks over to make sure that it's appropriate. There's nobody that checks to make sure there's no scam going on. I think part of that is it's hard to say what that would look like. And then there's also, I think politically, there's a balancing position where people say, well, we don't want to make it too hard to transfer property because then no one will be able to sell their house when they want. I don't know if I buy that argument, but I think that that's a major one that comes up is we want business to be able to run frictionless. So I think that's one of the obstacles that come up. To create alerts, that's done on Acris's website. I don't have the link in front of me right now, but if Will, if you can get that and drop it in the chat. Yeah.
Yeah, it's sorry, with my share screen, I'm fearful of
I don't know if it'll work.
But
yeah,
it's pretty Googleable. If you search Acris Alerts New York City, it should be the first thing that comes up. But I will also, in the follow-up email from tonight, I'll send everybody the link so you can get yourself up. It's sort of it's a little funky where like I might send you the link that then you make one or two more clicks to then get to the place to set it up. But we can send it to you, and we can I think we actually have an explainer as well of how to list things, so we can follow up with all of that.
Yeah, and it happens very simply, and then your email address is registered forever. And if anybody else tries to sign up for alerts, there's usually a notice that someone else is getting alerts as well. So, or at least that's something else I've noticed, which is always interesting to find out that there's other people getting alerts. The next questions I see here are about STAR, where to get support, and can a trust receive STAR benefits? I don't know the answer entirely about trusts, but I will say that my educated guess is that it very much depends on the kind of trust. That's something that we can talk about offline because it's a little bit out of scope here, but typically it really needs to be owned by an individual. And when I have people come in who want to do things and put their house in trust, it is something that I always mention. A lot of programs are only available to individual owners and not necessarily trust owners, depending on the kind of trust. So it's something to keep in mind. A life interest. So a life interest is a life estate is another word that it's called. These used to be much more common in the past. There's other tools now that we have, but people still do them. It's a special kind of deed where instead of me saying, let's say Will is selling his house to me and he just, he sells it and then I'm now the owner of the house. But I decide, you know what? I like Will. Will doesn't have anywhere to live now. I want Will to be able to live there for the rest of his life, but then I still get the house after he dies. There's a special kind of deed that says exactly that. What that means is that Will, who is living in the house until he passes away, has what's called a life estate. I then am the person called the remainderman, which means after the life estate owner passes away, the property reverts back to me and I become the owner again. This is a very good way to avoid probate. If you don't want to have to go to probate court, it is cheaper and simpler than doing a lot of other tools out there, but it comes with some other drawbacks that, depending on your individual situation, it can make sense or not make sense. It also can affect availability for certain benefits like we went over. And I completely agree that the lien sale is a problem and that it is not a good thing and that we probably should get rid of it. And I think we're on that path, but I think we have a long road to hoe until we're there. The way that we can also update deeds, I agree, is just completely out of control, but it is the system that we're working with. And so the goal right now is to make sure that you're getting as much information as you can so that you can get alerts on Acris and you can have a plan in place that if someone does try to do something, you're armed with tools that can stop it. And I see here from Ben, missed the first third. This will be, like Will said, this will be posted to YouTube later. I'm not sure exactly how long it takes to get on there, but I think you'll receive a notification, I think, when it's posted. For Sanchia, is the information here applicable to business property? This is not an easy answer. I'm going to say sometimes yes, sometimes no. Typically, when you're dealing with businesses and family businesses, it gets a little bit more complicated. But a lot of those business assets can be passed down just the same through a will. But it very much depends on how that business is formed. Some businesses have rules, depending on the corporate bylaws, how you can pass on interests and things like that. So if you have a specific issue with a small business, shoot us an email and we can talk about that. I see someone asking about future presentations on trusts. That's definitely in the works. We definitely want to talk about trusts. I have some positive and negative thoughts about trusts. I think they can often be great. And I think often they're one of these things that people have been sold of, that it's a magic fix and that you need it when you really, I will say most people do not need one. But they can be great tools depending on your situation. And I think those are the only questions I see here. The last here from Priscilla. The documentary. The documentary is called, let me get this again. And it is on PBS and it's on YouTube. So if you search on YouTube, Facing Death is what it's called. And it's by Frontline PBS. And it was posted about 2 years ago. So it's quite long. It's about an hour long. But I recommend taking the time to watch it if you can. And then, can anyone pay property taxes for property? Yes, they can take money from anybody. But the issue is when you get behind and you need to create a payment plan, they will only deal with the person who's listed as the owner of record, which is usually when problems start happening. Because if there's no one that they can negotiate with for a payment plan, then the amount of money just keeps rising and rising and rising. So that, and then from Joan, the difference between a revocable trust and non-revocable trust. I can cover that. I will cover this very quickly because this is one that is really this is its own presentation, frankly. But so there's two main kinds of trusts, revocable and irrevocable. A revocable trust is exactly what the name sounds like. It means once you create it, you can freely take it away. So let's say I create one and I want to put a house in it. I can put the house in it. You usually name yourself as the trustee of the trust so that for tax purposes, you still own it. But for other legal purposes, you are no longer the owner of the house the trust is. It requires you to file a new deed, transferring the property into the name of the trust. And the purpose of a revocable trust is pretty much just to avoid probate, which is that process in court that you have to go through sometimes after someone passes away in order to make sure the property is appropriately transferred. A non-revocable trust or an irrevocable trust is the opposite. Once you create it, that's it. You've created it and it's very hard to turn around. It can be done, but it is not something you want to have to go through. It is either expensive or time consuming or both. And it often is not something you have the luxury of time when this comes up. But what an irrevocable trust does is it also transfers the property out of your name, but it does it for a different reason. Revocable trusts are really just to make sure that you avoid probate. An irrevocable trust is used more often when you're trying to protect yourself from a creditor. That can mean Medicaid asset recovery, which is a whole nother can of worms that we don't have time to get into today. And frankly, someone who's more of a Medicaid expert would be better at that than I would. But if you want to keep that out of your estate, that's one way to do it. For people that are very, very wealthy and who are going to be subject to the estate tax when they pass away, which in New York is currently it's about $7.5 million individual, and federally it's $15 million per individual. So this really doesn't apply to very many people. For those people, they often put assets into irrevocable trusts to get it out of their estate so that they don't have to pay estate tax, or they pay less estate taxes. And then another kind of common creditor that I've actually seen a few clients come in with, and I've asked, why do you have an irrevocable trust? And it's usually because one spouse has a gambling problem or they're spendthrifts, and they want to make sure that no one can come after them from the debts they get after the spouse gets into. And so that protects the house. So that is a interesting use of an irrevocable trust, actually. But it's real. Those are the differences. One is freely changeable, one is not, and they do it that way for different reasons. But like I said, for more questions on trusts, I think that's a whole nother program that we can get into. And that's it in the chat. So Will, I don't know if you want to, if there were more in the Q&A. Yeah.
There's a few here. So we've got one, but with wills, the guardian, can't the guardian be someone outside of the United States? Due to abuse, you might choose someone outside of the US.
Yeah, that's one of those situations where you can name whoever you want in the will, but if you want someone who's not in the country to be a guardian, it can be tough to get past the family court. I think the family court is usually not going to want to send children out of the country unless it really is the closest relative. It could be also something where if the will says it's supposed to go to this person, then the court will take that into consideration. Um, but it is not, I will say, it probably will not be as frequently honored when the guardian is outside the country than when they are, especially if the child is a citizen, an American citizen, and the proposed guardian is not. Uh, that could create an issue in the court's mind. I haven't actually seen that come up anywhere, but that's actually a really good question. Uh, Similar to that is if you have property in another country. We do see this sometimes, especially from communities in Southeast Queens and South Brooklyn, where someone, they may own their home here and then they may own a piece of a family home back in the country where their parents are from or where they're from. And a will that you do in the United States cannot definitively control property in another jurisdiction. So I've done wills here where I say, the family home in Trinidad stays with the family or something like that along those lines, but you really need to go to a local attorney in those situations. And I would imagine for custody, it probably is something. The answer is probably something similar. Best to go to a local attorney.
Excellent. Thank you. I don't think we've covered this, but it's a good one. Would you need power of attorney or healthcare proxy if you are married, or is your spouse automatically listed as your power of attorney or healthcare proxy?
You wouldn't need one if you're married and the spouse is available, no, but it is always good to have, because how do you prove that someone's your spouse? Unless you're going to walk around with your marriage certificate to prove that they're your spouse, you're just going on someone's word. And if you have a power of attorney or a healthcare proxy filled out, then that makes it a lot easier for whoever has to accept what you're saying. For healthcare proxies, I think in particular, it's less important because I think hospitals usually will defer to next of kin often. But for a power of attorney, if someone else doesn't have signing authority on your account, it doesn't matter if they're married to you. It doesn't matter if they're your identical twin. It does not matter. No one else gets access to that unless they have a power of attorney. So I think for power of attorney, no matter what, it's important to make one, even for your spouse.
Excellent. What is the difference between deed theft and subject to?
I'm not sure what subject to is.
Apologies if I'm pronouncing this wrong. Shensi, if you're still on, if you'd like to ask your question verbally, you can raise your hand. Or if you want to type it in again, we'll let you type that up. But in the meantime, someone asked about getting an appointment with a housing attorney. Please reach out to our general info here. Sorry for the WW there. It should just be info@buj.org, or you can call our intake team at our 718-487-2300 number. We work to get back to folks as soon as we can, and so we can assess your situation for intake. And then I see, I think we answered this one.
Yeah, that was also in the chat. I got to that. Yeah. And then I see Dolores, who's actually a former client or a very recent former client of ours. She asked the question here is, what is a death to deed? And I think what you're getting here is a transfer on death deed. So I think transfer on death deeds are something very new in New York. They used to be they are in other states, and they've been around in other states longer, but in New York, they're new. I think we just started doing them last year, at the beginning of last year. It's similar to that kind of life estate deed that I mentioned, where the difference, though, is instead of transferring the property to someone else who then reconveys the estate back to you, what a transfer on death deed is it has to be signed in the same specific formalities that a will has to be signed. So there needs to be witnesses. It needs to be in writing. You have to sign it in an appropriate kind of way. You need an attestation that it was signed properly. When you do it that way, and with very special language in the deed, you can name beneficiaries right in the deed over who gets the house after you pass away. So I'll use the same example. It's my house, but I say when I pass away, I want it to go to will. I make a new deed that is witnessed, it's notarized, everything happens that's supposed to happen. And so when I pass away, the house can get freely transferred to will. All you have to do is provide a death certificate of proof that the person has passed away. And then the new person can create a new deed, move on. Very fast, very easy. It's often that skirts around the probate issue. It's one of the other ways opposed to revocable trust. There are some risks involved. It sounds very simple when I talk about, one person receiving it, but what if you have three kids and three grandkids and you want everybody to have a piece of it, but you want to make sure people get it in a specific way? That a transfer on death deed can't do. It can only do equal pieces, and it also only gives the property to beneficiaries of something called joint tenants, which basically means once you pass away, they all hold it in a type of property ownership where essentially the last to survive gets the whole property. After you pass away, all the owners can get together and change that form of ownership so they're not locked into that forever. But that can create problems, as you can imagine. Like, let's say you have three kids and each kid has a grandkid or two, and you want to make sure that all the grandkids eventually have a piece of the house. Transfer on death deed won't work because if nobody does anything after you pass away, it'll just end up kind of with the branch whose parent lasts the longest. And then all the other branches of your family that you wanted to take advantage of it won't. So that's another one where specific facts and circumstances really matter. But it's a great tool for an estate planner to have in their toolbox, and it's a potentially great tool for clients who don't necessarily need some of the fancier, like doing a trust can create a lot of work. Doing a will can sometimes be overkill. The transfer on death deed can make things much simpler.
Excellent. I see Shensi followed up here. I'm glad to hear I pronounced it correctly. So this subject to deals, there's a ton of investors on YouTube that are talking about subject to deals. Folks like P. Morby and others. Are you familiar with this, Andrew?
I am not, but I would say, as a general rule, if there's investors giving you ideas on YouTube, that they are probably not giving you the full story of what these actually are. A subject to deal, I guess that sounds like to me that if a future condition is met, then the deed gets transferred. I'm not sure what kind of time that would be a good situation to do that. I think there's probably a lot of other vehicles you can use instead of that. And it sounds like something speculative that the idea may mean for someone to essentially take the property from you and say, oh yeah, I'll give it back to you if your bank account reaches a certain number that they know you'll never reach, or if you're able to show a certain amount of payments or something like that. I don't want to opine too much because I don't really know exactly what they are. But my guess is that it's probably a more predatory vehicle than they're making it sound. And I also am seeing in here, do we help create the documents spoke about? Yes, we do. And I would just reach out to that info email address. And that's how you get the process started. And usually within a few days of emailing there, somebody from the team will reach out to schedule an intake.
Excellent. And I see, Anne-Marie, I saw your hand was up before, but I see you've got a couple questions here. So if we cover them, great. But if we don't cover it all, feel free to raise your hand again. Is that the same as joint tenants with right of survivorship, I guess?
Yes, that is what that is. So exactly, Anne-Marie. So when you do a transfer on death deed, your beneficiaries take it as joint tenants with right of survivorship by default. They can then later change it if they want amongst themselves, but they all have to agree if they want to change it. Typically, I would say most family members, if they understand what it means, they want to change it, but not always. So, but just something to keep in mind.
And does Build Up Justice NYC assist constituents with guardianship cases?
Not currently. I'm not sure if or when we will be able to, but they do. It's kind of just another layer of complexity here that we just don't have the resources right now to be able to assist with that, which is why we really encourage people to do powers of attorney and healthcare proxies, because if you have a power of attorney before you're incapacitated, then you won't need a guardianship. If you have a healthcare proxy before you're incapacitated, you won't need a guardianship. It's really hard when someone is incapacitated and they're in the hospital already and they don't have capacity to make a decision, and then suddenly the mortgage lender or the landlord is coming after them for money and they don't have anybody to deal with. And it can take months and months for guardianship to get approved, or it can take very fast. It really depends. There's a lot of considerations taken into account. Certain guardianships can be done somewhat easily by folks themselves. Surrogates court, and this is more for guardianships for people who have been disabled since they were children, a developmental disability. There's programs in surrogates court where it's much easier to do on your own. For other kinds of guardianships through New York Supreme Court, it's harder, and an attorney, unfortunately, is really the way to go. But City Bar Justice that I had mentioned earlier, I think they don't personally assist, but they can help you find someone who can help you.
So folks, we're getting really close to 7:30 here. I see two more questions. We'll answer those. And then if you have other follow-ups, like I said, reach out to us at info or our phone number. But we'll close with these two. If a spouse has a bank account that assigns a beneficiary to inherit the funds, can the spouse challenge the person who inherits the funds?
Spouse has a bank account assigns a beneficiary. Not if the beneficiary designation was made properly. So you can anybody can challenge anything at any time. There's nothing stopping anybody from challenging something. But the question is whether they'll succeed, obviously. So yes, the spouse can say, oh, my wife told me that she would, of course, make me her beneficiary. But then the form the bank has says it goes to me, let's say. If they can prove that beneficiary designation was made fraudulently or not properly, then they can challenge it. But that is going to be really hard to prove, especially with a bank. They usually don't screw around with their documents for things like this. It would be a pretty tough thing to do. And yes, Anne-Marie, particularly, even if the decision was made prior to marriage, that's actually a good question. There are some exceptions, not necessarily to the beneficiary designations, but in other areas of the law where there are certain things that it's assumed you've changed it to your spouse after you get married. But I don't believe beneficiary designations fall under there. And I'd have to look more in depth into the actual areas where that happens. But that is a very good point you make, that in very limited situations, after you get married, it will change. But I want to say that those are very, very limited.
All right, we can maybe squeeze one second one in there, last two. Isn't there a predatory practice of joint tenants selling their share and the new owner forcing a sale?
Yeah, so this is another way that deed theft happens, actually. So it's not joint tenants, because joint tenants can't freely sell their interests like that. It's something called tenants in common, which is actually the more typical way that properties are held amongst multiple people. What'll happen, and this happens, we call it fractured ownership. This can happen often. And then I actually was counseling a client against doing something like this earlier last week. Often someone will have a large family. They'll have 6 or 7 kids, 20, 30 grandkids. They want everybody to get a piece of their house when they pass away, because it's very important to them. They spent their whole life building this asset. They want to make sure the whole family benefits. Unfortunately, when you have that many people that are owners of a house, not everybody's going to stay in the area. Not everybody's going to ultimately stay in connection with one another. Not all of them are going to probably get along as adults either. And so what often happens is one of those family members usually moves out of state. They, they own like a 1/10, 1/12, 1/15 interest in the house, which is probably like 10, 15 grand, maybe a little more than that. And what'll happen is an investor will come around to that person and say, hey, I'll give you 50 grand for your 1/15 portion of the house. That's great. That person doesn't know the family that lives there anymore. They don't have anything to do with that house. To their mind, they're just getting a free $50,000. And so they do it. They sign over their portion. Depending on the amount of ownership the investor gets, they can then start something called a partition action, which can force the house to be sold. And guess who comes in to buy the house at that action? The investor that bought that little portion. So they end up getting the house cheaper than it would have been if it went on the open market. And then they can then turn around, redevelop the property, and make a killing off of it. So that is actually, I think, one of the most common kinds of deed theft out there. And it's harder because everything that happens there is legal. There's really nothing illegal about anything that I just described with that situation. It just is not just, it's people who have a tiny interest in a property who are then able to upend everything that has to do with it. So the way to avoid that is to not fracture ownership. Pick as few people to take control as possible.
Excellent. All right, very last one, folks. If you have, if your father and his wife buy a house, but the stepmother put herself and her daughter on the name of the deed, but it's not the child and the father did not know, and he didn't make a will. If he dies, what will happen to the three kids that he has?
Okay, so I think what's getting at here is basically what happens when you don't have a will and you have a complicated family situation. So when you don't have a will, essentially New York State makes a will for you. And what that will says is if you are married, everything goes to your spouse. If you're married and you have children, everything gets split 50%. Well, first, the spouse gets $50,000 off the top. And then of what remains, the spouse gets 50%, and then your children collectively get 50%. If you just have children, the children get everything in equal shares among themselves. If you have nine, and there goes my camera again. I don't know what's going on. But if you then have a spouse and children, if you have no spouse, no children, it goes to siblings. If no siblings, then parents. If no parents, then grandparents. If no, it kind of goes down, up, and out along your family tree. So that's what happens if you pass away without a will. When you start getting step parents and step siblings and half siblings involved, as you can imagine, the family tree gets very complicated. Typically, everything though needs either a blood relation, is what we'd call it, or it can be an adopted sibling is the same as a full-blooded sibling, and half-blooded siblings are the same as full-blooded siblings. So an in-law does not have the same rights as a spouse or a child or even a cousin. Even though you may be closer with that in-law during your life, they don't necessarily have any rights there. So the importance, again, is if you have a complicated family structure and you know who you want your property to go to, having a will is really important because the law will not recognize the way that our kinds of modern families that we have these days actually operate. It runs under, very, very old-fashioned ideas of what a family is and how things should be distributed.
Wonderful. All right. We'll wrap it up for questions there. I saw a couple other folks wondering about getting services. Please, if you have any questions about getting connected to other services or wills and estate services, please reach out at that info@buj email. Again, use the one in the chat. Sorry for the www there. Just use info@buj.org. Want to quickly shout out upcoming other events and resources. We host every other week. We do a virtual tax table. This is your chance for a 15-minute one-on-one with our tax team. If you have any question, big or small, they can let you know what your next step is. Sometimes it means it's something a quick fix and just handling a little bit of paperwork. Sometimes you might be a good candidate to be our client. So if you want to scan this, and I'll send the link to that as well in the follow-up. These are every other Thursday evening. You can set up a 15-minute appointment for a free chat with one of our tax experts. Also want to shout out, I'll send this flyer along, but sadly, just with my share screen set up, I don't think I can pull it up. But the Deputy Speaker has a Spring Fest coming up in April on Saturday, April 18th. This is a family event, little big games, events, food, and resources as well. And it'll be in Archie Springer Park in the afternoon. So keep that on your calendar, April 18th, Saturday, coming up. And we'll share that flyer as well. And with that, want to say thank you to everybody. Thank you also for a lovely.
Thanks so much, everybody.
Yeah, I appreciate everybody's appreciation of Andrew. I'll give the round of applause to Andrew. So much incredible, great information. Really appreciate it. And thank you so much to the Deputy Speaker for your partnership. Thank you to Joan for joining us and the resources you shared as well. If anybody has follow-up questions, please feel free to reach out to that info email. We're here to help, and Andrew's done an incredible job, and so we're excited to continue helping folks out. I think we'll wrap it up there. Thanks so much again.
Thanks a lot.
All right.